all about proper fund selection. Sino dito familiar sa mutual funds? I've heard mutual funds, UITFs. This topic is really close to my heart because a lot of people are investing in the stock market through funds. So it's a really good idea to know how to properly select the mutual funds or UITFs where you will invest. Hindi lang yan puro returns, but you also have to take into consideration the risk of the funds as well as the objective of the funds. And I'm very honored to introduce to you the next speaker. The title of his session is Fund Selection Strategies You Need, and I'm happy to introduce our speaker. Sir Mark Ilaw is actually the Business Development Manager of COL Financial Group, where he is currently overseeing the first online mutual fund distribution platform in the Philippines, known as COL Fund Source, while also handling strategic efforts of the company. Prior to this, he was the investment analyst at the BDO Trust and Investment Group, covering equities, fixed income, and macroeconomic research and strategy. He graduated magna cum laude with a Bachelor's of Science degree in Management Engineering from the Ateneo de Manila University. He has also earned the right to use both the Chartered Financial Analyst, CFA, and the Certificate in Investment Performance Measurement designation. Without further ado, I would like to introduce on stage Mark Ilaw, CFA CIPM.
Thank you, Jerome. Hi everyone, good afternoon. Okay po ba tayo? Are we enjoying the day so far?
Yes.
Are we learning a lot?
Yes.
Are you ready to learn more?
Yes.
Alright, that's great. So as Jerome mentioned, my talk this afternoon is about fund selection strategies. But before I delve into my topic, I'd like to ask a question muna. I know you guys are still young and probably it hasn't crossed your mind yet. But let's assume that you're thinking about your retirement already, as early as now. By show of hands, may I know, who among you here would say, having 1 million pesos is already enough to sustain my needs? No. Okay. 10 million pesos? No. 20 million pesos? No. Higher than 20 million pesos? Yes. May mga hindi nagtaas ng kamay. Sino yung walang pake? Pala na. It's very interesting, and I like the fact that all of you guys are very aspirational. You don't want to settle for 1 million, 10 million, more than 20 million. I'd like to share with you a very interesting study. This one is a recent study done by one of the largest insurance companies here in the Philippines. Okay. There you go. According to this study, they asked Filipinos on average, how much are you saving for your retirement? Today, how much do you have for your retirement? Filipinos on average said they have 3.6 times worth of their monthly salary as their retirement fund. Just imagine, if you're a typical Filipino, you're earning, let's say, 20,000 to 30,000 a month, and you just have 60,000 pesos for your retirement. Saan ka makakarating? Is it any wonder then that most Filipinos, when they retire, they end up being dependent and broke? Right? Think about it. Who among you here know a retired person? Maybe it's your relative, your parents, a family friend. Picture their lives. Most likely, they are dependent on other people, right? And the reason why I say this is because I want you to realize this afternoon that as early as now, it's very important that you think about how to achieve financial freedom in your life. That's the goal of anybody, to achieve financial independence. Now, there are two pillars in order to achieve financial freedom or financial independence. The first one is you create wealth. The next one is you build wealth. or you multiply your wealth. Now, how do you create wealth? I'm glad that the last question from Boss Lawrence's session was about day trading versus investing. And how he answered it is similar to how I'd like you to think about building wealth, creating wealth. When you're creating wealth, it's primarily coming from your career, your job, your day job, right? Or your business, your own business. That's how you should think about it. Now, when you're building wealth, that's when the investing aspect will come in. And I tell you, both need to be hand in hand together in order for you to achieve financial freedom. I tell this to people because this is actually the lesson that I got from my parents. My parents, all their lives, they've been working hard. And I come from a middle-income family. Okay? But now, we're okay. My siblings, we were done with our studies. But I can see my parents having nothing. They haven't saved a lot. It's because they only focused on how to create wealth. They didn't think about how to build wealth. And that's the difference that I want all of you to take home with you. In order to achieve financial freedom, it's not enough that you're focusing on one pillar of financial freedom. It has to be both. And this afternoon, of course, since we're in this breakout session, we'll be focusing on the investments part, the building wealth. Now, when you're trying to build wealth through investing, there are so many ways to go about it. As we've learned in the previous session, you can actually do day trading, or you can actually be a long-term investor. If you ask me, I think for the greater majority of you here, it will be more of the latter. Long-term investing rather than trading. Of course, for those of you who would like to learn about trading, you have to understand the principles, much like what Mr. Lawrence Lee discussed. But for the greater majority of us, I would think it would be more on the long-term investing side. Why? Just think of it this way. Let's assume we're taking a look at investing in the stock market. And you'd like to buy different companies, individual companies. The stock market has been defined already by Mr. Lawrence Lee. It's a place where you are investing in businesses. A place where you partner with businesses. Businesses that are already established, that have real products, services, that have profits, right? But here's the thing. Here in the Philippines, if you'd like to invest in individual stocks, the market is open from 9 a.m. to 12 noon, and then 1:30 to 3:30 p.m. every business day. Question. Most likely, where would you be during those times? In school, right now, yes. But after graduating, most likely, where would you be? Exactly. And my point is, not everybody would actually have an investment-related job. Some of you would work for a bank. You might be a loan officer, a credit officer. Some of you would work in a digital industry, marketing. Some of you will venture into your own business. Some will pursue further studies. Some will actually pursue other professions. You might become a lawyer, operations head, whatever that may be. Okay? The reality is, if we think about the mix of people inside this room and how many of you will actually end up in an investment-related job, if that is the question, I think it's going to be a small portion. But does that mean that only a small portion of people should invest? Of course not. As we've said, in order to achieve financial freedom, 2 pillars. You have to build wealth, you have to create wealth first, and then you build wealth. Okay? Now, let's assume that you still have the time and effort, okay, to monitor what's happening to the stock market. The next question is, how would you be successful in picking the right investments or stocks if you still want to go to that route? I tell you, you have to make sure that there are factors, 3 factors that you're able to do in order to be successful at stock picking. The first one is you have to have discipline. So if you listen to the talk of Mr. Lawrence Lee, he talked about the technical analysis tool, right? And it's something that you have to learn if you really want to be great at stock picking, be great at investing in the stock market, trading it every now and then. It's not something that you can just enter, do it as a hobby, or do it as if you just feel like buying and selling different companies. Doesn't work that way. Okay? So the first factor is you have to have discipline. The next one is a bit of knowledge. The stock market is not something that you can just enter and then all of a sudden you're already good at it. It doesn't work like that, right? In any discipline or profession, you have to have a bit of knowledge in order to know how to go about the investment journey, okay? The right investment journey. And finally, do you already have the experience? Or even if you don't have the experience, an inclination to build your experience in investing. Because if the answer is no to any of these factors, I tell you, it's going to be challenging if you are going to invest in individual stocks, monitoring the stock market regularly on top of having a regular day job. The reason why I tell you let me give you an example of the performance of different publicly listed companies. Here we have SM, PLDT, Jollibee, and finally, Meralco. Now question, do all of these companies have track record? Yes or no? Do all of these companies earn money? Yes or no? Do they have good products and services? So final question, are they good investments? Are they good investments? Yes or no? Sabi niyo yan, eh? Sabi niyo yan, eh? Now, let me show you the track record of these companies, basing it on their performance in the stock market. 10 years ago, the price of SM per share was 177, thereabouts. By a couple of days back, okay, by end of August, the price of SM was already at 1,026 pesos. Good investment, yes or no? Absolutely. If you invested in SM over that period of time, your money would have grown by 19% on average, compounded over the last 10 years. Great investment. Now let's go to PLDT. 10 years ago, PLDT was priced at 2,500 pesos. Today, how much is PLDT? 1,179. So instead of earning money, you would have lost money. Okay? Now Jollibee, let's take a look at Jollibee. Jollibee, it was only 51 pesos. So even if you saw the chart earlier, no, it went down recently. Okay? Jollibee over that period of time still provided handsome returns, right? Almost 17%. Great investment. Now Meralco, let's take a look at Meralco. Meralco, it was 201 pesos back then. Now it's 365, giving you a return of 6% roughly. The reason why I show you this slide is to actually communicate this very simple message. In the stock market, not all companies are created equal. Some companies will grow faster than the rest. Some companies will not grow at all. Some companies will just grow at par with the average. And the challenge is finding the right companies that will actually give you the best returns. Now, like I said, most of us would end up with jobs that are non-investment related. Walang kinalaman when it comes to investing. What do you do then if that is the case? That is where funds will come in. What are funds? Funds, you can think of them as like a basket. A basket with different investments or companies inside it. So instead of you studying one by one, taking a look at each company to figure out how much to buy, what to buy, when to buy, you don't need to do any of those things anymore. When you invest in a fund, you get the services of what we call a fund manager. An expert will actually be the one to formulate the basket for you. Somebody will pick stocks and do it as a full-time job. Somebody will watch the stock market. So even if you're doing your job on the side, you're focusing on your career, you are still able to participate in the stock market by buying a fund. That's the beauty of it. Aside from that, buying funds is actually more affordable. Why? Today, do you know how much you need in order to start investing in the stock market? You only need 1,000 pesos. But with 1,000 pesos, you can probably just buy at most one stock, if ever. That's not enough. That's not enough. So if you have such amount of money to start with, I highly suggest you do it by buying funds. That way, you're able to buy different companies all at once, even with a small amount of money. Yun yung maganda sa mga funds. Okay? And finally, like I said, since you are letting an expert handle the money for you, somebody is buying different companies for you, you don't need to actually monitor or study what's happening in the stock market very religiously. So it frees up a lot of your time so that you can focus on creating wealth. That's the great thing about mutual funds. Pooled funds, investment funds in general. Now, how do funds work? Para malinaw, wala na tayong confusion. Essentially, when you invest in funds, you have different group of investors, and you combine all their money, all their investment. Let's say in this room we're about 500. If each of us invests 1,000 pesos together, we'll be able to form 500,000 pesos. The same 500,000 pesos, that will be the value of the fund. Okay? And then, like I mentioned, an expert will actually oversee the pooled fund, and he or she will be the one to put it into different investments. That's how funds work. Okay? Now, we already understand how funds work and how you can participate in the stock market or in any investment market through these funds. I'd like to teach you some strategies to make sure that you will be successful at selecting the right funds. Very simple but practical strategies. The first strategy that I'd like to share with you. Number one, you have to own the right funds for your goal. Why do I say this? You have to understand that there are different types of funds in the market. But in order for you to know kung alin yung paglalagyan ng pera mo, you have to understand what are your goals. Okay? Now let me share with you what are the basic type of funds that you can find in the market. The first type of fund that you can find in the market is what we call a money market fund. What is this? A money market fund is a vehicle that can be a substitute for your bank deposits. So essentially, if you are looking for a vehicle where you can park your money in the meantime, you need it, let's say, in a year's time, and you want to earn some profit out of that money, this is the vehicle that you're going to take a look at, a money market fund. It's best for your emergency or current needs. Okay? Short-term investment, essentially. The other type of fund that is usually available in the market is what we call a fixed income fund. A fixed income fund, this is a basket that invests in different bonds. What are bonds? Bonds are investments where you are lending, right? Where you are lending to a party, usually to the government That's what the Bureau of Treasury does. They issue bonds. So when you buy the bonds of the Philippine government, you're lending them money. In exchange, they're giving you interest. Right? So that's how bonds work. That's what a fixed income fund invests in. This one, on average, the characteristic of a fixed income fund, it is a vehicle that you look at if you want to have moderate growth. Finally, we have the last type of basic mutual fund or pooled fund that you can find in the market. This is what we call the equity fund. An equity fund is a type of mutual fund that invests in the stock market. So this one is the vehicle that we're going to take a look at if you want to grow your money over a long period of time. Okay? Now, since we're talking about investing, I will zero in on the two types of funds that are really relevant when you're going to build your wealth. And that would be your fixed income fund and your equity fund. Money market, like I said, this is for short-term use. Now, in the first strategy, the most important thing actually is knowing how much you should put into each type of fund. Should it be 70% equity, 30% fixed income? How do I do that? Before you go into that, I'd like you to realize the difference in terms of the return behavior of these investments. When we're talking about fixed income funds, I told you that it's a vehicle that provides moderate growth. This is something that can allow you to probably earn higher than inflation, but you don't expect it to give you phenomenal returns. So for example, over the last 10 years, fixed income funds here in the Philippines, they've been giving investors on average roughly 4% return. Now, if we take a look at the behavior of returns over that period of time, on average, the positive returns, before that, going to equity on the other hand, 12%. So long-term growth talaga. It will allow you to build wealth over a long period of time. Now, as I was saying, if you take a look at the behavior of returns, fixed income fund on average, yung 1-year return nila is just at 6%. If you take a look at equities, on the other hand, it's almost 19%. Okay? But does it always return 19%? Of course not. As in any investment, there will be ups and downs or what we call volatilities. And that is where the difference in risk profile of these funds will come into the picture. Because if you take a look at the average negative returns of fixed income funds, that's just about 1.5%. Compare that to an equity fund that can go as low as 9% on average, or even higher at times. Even higher at times. And that is why I'm telling you, it's very important to get the right mix between equity and fixed income. And on that note, for you guys, very young people, it's advisable that you put most of your money in equity funds. Why? Because you guys have a long way ahead. And that is how you will be able to build wealth. You focus on your career, you improve your earnings capability through promotions, through businesses or whatever. And then you keep on investing, save, put a lot of your money in the stock market, and over time, you'll be able to build your wealth. That's the first strategy. Okay? You get the right mix, you own the right fund, 80%. Equity funds, balance, that would be for the fixed income. Second strategy, keep it simple. What do I mean by this? If we're focusing on equity funds, since that will be majority of your investments, you will learn later on that there are a lot of equity funds available. There will be equity funds that will focus on dividend-paying stocks, high-growth stocks, but there will be equity funds that will focus on what we call the blue chips. And this is what I'd like you to take away from this session. If you're going to invest in the stock market, you'd like to do it the most convenient way possible. Take it from this guy. Warren Buffett, as many of you may know, is considered as the greatest investor of our age. And he is one of the biggest advocates of investing in what we call an index fund. What is an index fund? An index fund is a type of vehicle that actually copies the performance of an index. For example, here in the Philippines, what do we call our stock index here in the Philippines? It's the Philippine Stock Exchange Index, and it's composed of the top 30 largest and most rated companies. That's precisely what an index fund invests in. And the beautiful thing about it is you can invest in an index fund for as low as 1,000 pesos. And I tell you, the reason why it's so reasonable to invest in an index fund is because, I tell you, it's very hard to perform better than the index. Case in point, in the US, if you take a look at the percent of funds that are able to provide better returns compared to an index, over a 10-year period, that is only 15%. Meaning, 85% of other types of funds perform below the index. Here in the Philippines, is it different? The answer is no. So it goes to show how hard it is to actually perform better than the index. And why is that? Why is that? It's because of this reality. Do you guys know what this curve is? What is this? That is your bell curve. And this will describe the distribution of your grades at the end of this semester. Right? And I tell you, the same principle applies in the stock market, in that there will be outperformers and there will be underperformers. Okay? But here's the thing. If you include the cost that is involved in investing, you'll realize that more and more, there will be less of the outperformers compared to the underperformers. And that is why investing in an index fund makes a lot of sense. And since I'm talking about the cost, that leads me to the last strategy. Strategy number 3 is to actually minimize your cost. You have to remember this, ladies and gentlemen. The number one enemy of any investor is your emotions. The number 2 is cost. So you have to minimize your cost. Okay? And just to share with you how important minimizing cost is, let's take a look at different types of funds. Let's say you have a low-cost fund and a high-cost fund. And think of it as if you're going to a race. A high-cost fund, I tell you, it will always be at a disadvantage. For example, if we're talking about an index fund would have the same returns, regardless of who's managing it, since you're just following a certain benchmark. Let's say the index returns 10%, and the only difference between these funds is how much they charge their customers. You will realize later on that the more they charge, the less favorable for you. So the less costly an investment vehicle is, the better for you. Because you have to understand, ladies and gentlemen, that costs also compound over time. Just a couple of slides. If you take a look at the impact of cost over, let's say, a 40-year period, if you are not paying for anything, and let's say you're earning 10% for your 20,000 peso initial investment, you would have earned 885,000 pesos over the course of 40-year period. Now let's say you're paying 2% cost. How much will you earn? You will just earn less than half of it. Why? Because the other half went to paying costs. That is the importance of minimizing your cost. As the great John Bogle, who is the father of index fund, once said, high investment costs destroy the magic of compounding returns. So that's it. 3 very simple strategies. Own the right funds for your goals. Keep it simple. Prioritize and invest in index funds. And finally, minimize your costs. Bonus strategy for all of you. Since you guys are very young people, okay, I'd like you to understand this. Start early and invest regularly. Why? Let's say we have 3 different individuals. A 20-year-old, a 30-year-old, and a 40-year-old. All of them have the same goal. That is to earn 10 million pesos by the time they retire. If you start investing for your retirement at 40 years old, in order to reach that goal, assuming an 8% return in the market, you would need almost 18,000. Medyo masakit. Right? If you started when you were at 30, mas kaya, 8,000. But I tell you, if you start at an even earlier age, 20 years old, it's even more affordable. 3,000 pesos. Okay? You can even start with 1,000 pesos. The thing is, you have to start now. Because I'd like you to realize, ladies and gentlemen, that in investing and in many aspects of your life, the most important asset that you have is what? That is your time. Because no matter how hard you work, it's a finite resource that you can't take back. So I hope you guys will use your time wisely, you spend it wisely, and by the end of this summit, I'd like all of you to ask this question to yourselves. What can I do today for which I can thank myself 20 years from now? And hopefully you act on it. You do it regularly, whether it's something to do with investing, so that you will live a richer and meaningful life. Thank you, everyone.
Thank you, Sir Martin, now for that very practical session. And now to move to the next session, which is the Q&A, I would like to call on your moderator, Mr. Ryan Pasion, an undergraduate student from the University of Santo Tomas. Take it away, sir.
Thank you. Hello guys, so I'm Ryan Pasion. I'm from the University of Santo Tomas and I'll be the student moderator of Mr. Mark Ilao. Firstly, that was a great presentation.
Thank you.
Take yourself some water. Oh, you already have one, right? Okay, so anyway, as business students, I'm pretty sure there was a lot of takeaway that we have garnered from Mr. Mark Ilao's presentation, especially for those students who seeks to invest in funds and stocks. Mr. Mark Ilao, we are currently waiting for all of your questions right now. So if you guys have any questions for Mr. Mark Ilao, please send them through the app. But while we are waiting, I have an initial question for you, Mr. Mark. From what we have gathered from the presentation of yours, you are very encouraging of students or people to invest as early as now.
Yes.
So my advice is, my question is, what advice can you give for college students who seeks to invest in stocks and funds as early as now but find themselves financially incapable of doing so?
Okay, that's usually the circumstance of any student. When I was in your situation, ganyan din ako. I didn't have any budget or money to start investing on my own. But this is a practical advice. I'll give you 2 things. The first one is, get your financial habits in order as early as now. What do I mean by that? Right now, you are dependent on your allowance, right? You try to spend it wisely. Budget it properly. Don't spend everything. Because I tell you, how you spend your allowance today, it's going to be the same way as to how you will spend your salary. So if you don't get the budgeting part properly as early as now, it's going to be harder and harder to start your investment journey. That's the first practical advice. The second advice I'd like to give you is this. Even if you don't have any money yet to start investing, you can always enrich yourself with investment knowledge. How do you do that? You read books. Free, di ba? Or it will cost you a couple of bucks lang. So I'll give you some recommended books. One of my favorites from John Bogle also, The Little Book of Common Sense Investing. So one of the best books for beginners. No? You can also take a look at Stocks for the Long Term by Jeremy Siegel, and then also yung essays of Warren Buffett. So you can start with these books. Okay? So those are the things that you can do, even if you're a student.
Right, right. So Renee Tayag asks, with the Philippines' current economic performance, inflation rate being at its lowest, and with the stagnant government spending due to the delay of the national budget approval, would it be more attractive to invest in the economy?
Okay, great question. No? So you have a lot of, shall we say, negative developments lately. But again, you're focusing on short term, if that is the kind of perspective where you're coming from. But if you ask me, as what Mr. Lawrence Lee showed, the demographics here in the Philippines is one of the best across the world in terms of distribution. And that would mean actually a more sustainable growth for the Philippines in general. So what's happening right now is you have a market that's trying to digest negative news. That's why it's not going up. But I tell you, it's actually a good thing for long-term investors because you can start investing, you can start buying at such an attractive price. So over a long period of time, your investment will grow and you will look back and say, buti na lang nag-start ako nung time na meron pang issue sa Philippines. Usually that is the case. The best time to invest is when nobody wants to. When people are talking about negative things, that's usually the best time to do it.
All right, thank you. So last question from Ray Ortega. Aside from long-term investing, what are the other beat strategies you can suggest that will assure the investors that their future is secure?
Okay. Aside from long-term investing, I think it really boils down to having a proper financial plan. Ay sinasabi nila na failing to plan is planning to fail. No? Like I said, when you want to achieve financial freedom, it has to be the two pillars. Not only about building wealth, not only about long-term investing, but also about creating wealth. Okay? You focus on how you can improve your career, how you can improve your skill set. That's one of the best things that you can do in order to achieve financial freedom. Now, as far as building wealth is concerned, I think really for the great majority of us, the most practical route is long-term investing. It's even better if you don't watch the stock market regularly. Because like I said, the number one enemy of investors actually is your emotions. So the moment that you stick to your plan, to your long-term investing horizon, that would be the best, probably, element that you can include in your investment journey.
All right, thank you. I hope that answers all of your curiosities. Thank you so much, Mr. Mark Ilaw. Let's give him a round of applause.